All right, so you guys know I love to share the knowledge that I'm gaining from all of these investing books. I can tell you this, it's helping me to keep grounded, okay? This market is incredibly volatile. It's gaining knowledge and understanding like this that, volatility is the price that we have to pay for long-term success in the markets. That's just a fact, okay? Volatility is the price we pay. And I know a lot of you guys who started investing towards the end of last year or after the Cironi crash, this is your first time really experiencing volatility in a bear market. And it feels like it's not going to end, but it is going to eventually end. And guess what? There's going to be a ton more volatility to come, okay? So I've already shared this paragraph already in a previous video. And essentially the concept is volatility is a fee, okay, that we have to pay. Right now, I read this story a couple of months ago and I shared it with my Discord and I thought it was really, really interesting. It's from this investor called Rick, and he was an early investor in Netflix. He purchased Netflix in 2002, shortly after the Netflix IPO. Okay, so he managed to pick up 500 shares for less than 2,600 in October 2002. All right, and he's titled this my $802,179 Netflix mistake. And I'm not going to go into the full depths of this article, but essentially this is what I want you guys to take home. Okay, so he sold 90% of his original position in the disruptive video giant way too soon. Okay, and he advised here, when you find a growth stock early in its cycle of redefining the market, you hold on, right? You hold on. Now, what is even more fascinating, right? This article was in 2017. He's given us an update, and it's now no longer an $800,000 mistake. It is now grown, right, 4 years later to a $3.5 million Netflix mistake. And it's all because of what? He sold too soon due to the volatility of the stock. Now, I found this story really fascinating and I really wanted to understand what he meant by hold on, right? You hold on. So I went to the Netflix chart, all right? So we went back to 2002. Now, this was when Netflix IPO'd, right? And this kind of looks like Robin Hood right now, because soon after it IPO'd, it tanked 75%, all right? So this decline right here from $1.20 down to 30 cents was a 75% decline in the stock. So that's Netflix's introduction to the markets, all right? So eventually the stock recovered, of course, with good performance from the business, right? So we now head into 2003, right? Okay. So 2003, you can see it had a beautiful rally from 2002, recovering from the floor, rallied all the way up to $4 a share, right? And then look, it tanks again in 2003. It has a 30% decline, okay? This is crazy volatility, but trust me, it gets worse, right? So it tanks another 30%, but it recovers, all right? And guess what? In 2004, it tanks again. So I hope you're keeping track. It tanked 75% in 2002. 2003, it tanks 30%. We're now in 2004. Okay, so 2 years later, the stock has had a beautiful rally to $5.68. And guess what, guys? It tanks another 77% in 2004, all the way down to $1. Insane. Absolutely insane. So it pretty much started tanking in January 2004, and it tanked throughout the whole year, giving up all of its gains, minus 77%. And it then starts to consolidate for a couple of months. So this is what this author means by you hold on, okay? We're only 2 years into this investment and we've seen 3 massive declines, but this being the largest, 77%. But guess what? It gets worse, okay? So we're now in 2005. The stock has consolidated, pretty much done nothing from when it collapsed from 5 to 1. And okay, we start to rally again because the company begins to perform quite well. Earnings are picking back up. They are making a mark, okay? They're disrupting the industry. And then we see another 25% decline here. So it hits $4. It goes back down to $3.20, 25% decline. And then we're in 2006, okay? So from 2006, you can see it kind of goes sideways again. And then we see another 45% decline. So pretty much every single year from when Netflix IPO'd, they have experienced multiple declines. Okay, this is a 45% decline, and then we go to 2007. Okay, so now we're 5 years into this stock, right? We've experienced a 45% decline in 2006. We're recovering going into 2007, and guess what? It experiences another 48% decline. This is insane. Imagine if you purchased shares in 2002 and 5 years later, you're seeing the stock is down back where you purchased it from around $2. Madness, all right? Madness. Another 48% decline. But again, it gets worse. Hold on, all right? This is what volatility looks like, okay? This is the price that we have to pay for long-term success, because you guys already know where Netflix is right now. It's insane. But this is what volatility is like when you get in very early, especially when the company's at its infancy stage of the S-curve. This is the price you have to pay, okay? So we're now 5 years in, going into our 6th year of investing, right? But you can already see this decline here. Insane. So the stock rallies in 2007, rallies going into 2008, and we experience yet again another 56% decline. Okay, so back in 2008, that's when we had the financial crisis, and there were so many things going on that affected the stock, but the business was doing well. However, didn't stop it. It was down minus 56%. I mean, by this point, and be honest, comment in section below, would you have still held Netflix? If you invested in 2002 and 2008, you're down another 56% again. Would you still hold this stock? I mean, obviously with hindsight, it's easy to say, yeah, I would have held. I mean, this guy would have held as well, right? If he knew his mistake would be worth $3.5 million, but he sold because the volatility is too much, all right? So 56% decline. Then the stock eventually rallies again from $2 all the way to $7. We see another 30% decline here. It's crazy. And then we go on another rally from $5 to $8. We see another 23% decline here in 2009. So every single year we've seen declines of over 20% or more in the stock. This is the price, all right? But from 2009 to 2010, we go on a beautiful rally, okay? A beautiful rally. The stock absolutely takes off. So from a low of $6, we're rallying, guys, okay? We are taking off. 2010, we're on the way to the moon, right? We're finally getting rewarded for our patience. You know, all of the volatility that we've been through. People are now believing the Netflix business model. They're disrupting the likes of blockbusters. Everything is going beautifully, okay? Then we go into 2011. And guys, you can already see the box, right? It was ugly, okay? So the stock peaks at $43.54. And guess what? It tanks yet again in 2011, okay? It's not over. You think this $8.90 is over? It's not over. So it tanks from around July 2011, tanks all the way 83%, and the stock tanks from $43 back down to $7.50. It loses more than half of its value, 83% decline. I mean, that's insane. That's an insane dip. That's an insane hold for anybody, okay? This is why Peter Lynch says, you know, the most important organ in the body is not the brain, it's the gut, okay? Because to stomach this, after 10 years of holding this stock, to see another 83% decline, insane. Absolutely insane. But again, let's fast forward to where we are now. Let's go to the Netflix of now, all right? Because Netflix has been one of the best performing stocks over the past 2 decades. And we go to Netflix, and where we are today, we're at $604, okay? So that was this guy's $3.5 million mistake. Now, with that in mind, we're looking at companies like OPENDOOR. You can see it's been incredibly volatile. When it was a SPAC, it was $10. It had the highs. It ran to $40. Now we're back down at $14. Again, volatility that we're seeing. Airbnb as well. Again, it's been incredibly volatile hold. It IPO'd at around 123, went to 219, dropped back down to 130. We went up to 212. We're back down to 171. Let's look at HIMS. HIMS is another beautiful one. It was a SPAC at 10, ran to highs of 25. We're now down to $5. Celsius, the exact same thing. Went up, down, up, down. OPAD, OPAD had a crazy run to about $20. We're now trading at $7. This is the price that we have to pay, volatility. And the question that you have to ask yourself and be completely real with yourself is, can you stomach this? Have you got the gut to be able to hold on and not make the same mistake that this investor made by selling Netflix? I mean, you could easily read this and think, oh, he's an idiot for selling. But you've seen the volatility in the Netflix stocks within its first decade of trading on the market. It would have taken someone with incredible guts to really hold through it. Unfortunately, this investor didn't, and he's happy to share his story with us. And this was his most important lesson here. I would like to think that this was a costly but important lesson. When you find a disruptive growth stock early in the market rattling process, you hold on and see it through. Let my loss be your gain. It's the least that I can do. And on that note, we're going to end it here. So I hope this video shed some light on really what the market is like and what it takes to be successful in this market. If you gained any value, please make sure you smash that like button. If you're new to the channel, hit the subscribe button and the notification bell if you want to stay up to date with all of my latest video content. Also, if you want to be part of my Discord group, you can join by clicking the Patreon link in the description below. With that said, I'll see you in the next one. Peace.